Hi everybody, this is Gary Dean with Sentiment Timing, and it's an added version of last night's free report that I put out because I figured I would follow up on it. A couple things, reasons why is one is a bunch of the links that we had on the page weren't active, so I figured instead of sending out the just a rerun of it, I figured I would give you guys a little update. So let's get started. At Sentiment Timing, we believe that human beings and the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. And we find these irrational opportunities through Woody Dorsey's sentiment database, which measures how traders are feeling about the market. And for the most part, it's a contrarian indicator, but it has to be it always has to be diagnosed, and that's what Woody's been doing for over 35 years. And on top of that, we go with technical timing turn dates, and they project when the indexes are going to reverse. Now, our most recent one was April 22nd. We are looking for a move to the downside, and then what we do is we just add everything into our regular technical analysis. So basically the whole theory is when you see the euphoria like we've been seeing really over the past couple weeks, especially on the media, is when you want to start getting cautious, and you want to be you don't want to just be buying into what everybody's telling you. And when everybody is capitulating and looking for the market crash or picking out numbers that are 100, 200 points lower on the S&P is when you want to start looking for a bottom. So like I said, I had mentioned that we had a turn that was on the 22nd. The top actually came on the 20th. That was that was like the stop area. If you took a short, is at the previous highs. And right now, we know when we're going to be expecting the low. So this isn't like really a day trading type service. We're more for the swings. So we know when the low is going to be, so that the stop is basically at the previous high right here. And this is the sentiment chart that is that's showing you that we have the excess bullish sentiment, where you have the 92, 95, 90, 93, 91, but yet the S&P had never made new highs. So everybody was anticipating this the breakout, and I was seeing targets as far as 2,500 on the S&P. And the same exact thing took place on the last rally that we had in that was going into from last year. Everyone was looking at 2,200, 2,300, and we never even took out the previous highs. And that's the sneaky bear market that we're in right now. It's not really a longer term call. It's something that we're looking to be very, very bullish in 2017, but 2016 is going to be a bear market. And what we mean by a bear market is it's lower highs and lower lows. And they're going to whipsaw people all over the place, like we've been seeing, where everyone is either not covered or protected on the downside and overexposed on the upside. And then from there, what happens is they pull the plug out like today. And before anyone knows it, the S&P is 30 points lower, and nobody knows what's going on. And knowing that everybody was bullish, you don't want, even if it was to break through the highs that we had just made and it was going to jump up, there's still many resistance areas. And the fact that everybody is on the side to look for the breakout, that it's just usually not going to happen. And we needed a little bit of catalyst as far as for a downside movement, and that was the Bank of Japan not really following suit with this easing program that the central banks are doing. And from there, futures tanked, and we saw the indexes have a decent bounce today. But sure enough, as soon as we got up to the highs, the plug got unplugged again, and we saw everything just roll over. And to me, it seemed like somebody stepped in, whether it be the plunge protection team, because I didn't see a bid coming out on. I was following IWM at the time, but all of them, and they were going down hard, and then all of a sudden it just kind of stopped. And it could have been towards the end of it because it was towards the end of the day. But in any case, the high sentiment is saying be careful. That's really probably the best thing to put it. Same with our intermediate term sentiment. So let's take a look at the regular charts now. I'm not going to sit there and say this is the start of the big leg down, because right now we are still within this zone. The Bears need to take out the 2072 or to really the 2070 area to get momentum, to see at least a test down at the 2039 or the 2033 level. And the Bulls need to push it through the 2104. And from there, though, they're still going to hit the resistance that's above. And you can see we're still not even completely oversold. We don't have any bullish divergences, and we had bearish divergences on the way. So we're still within the zone. If the Bears can push through this tomorrow, then they're going to see momentum pick up. Now, if we look at a 60-minute chart, it's a rising wedge right there. These bearish divergences started all the way back in going back to February, and it's been going. There's never been a good rest period here. And right now, again, this is your support area. I think it's the lifeline right now for the Bulls. If they lose that, it's going to be a quick drop, a reaction drop down to the 2040, 2034 level. If they lose that, that's when you start anticipating to you start eyeing down 1961, 25, and 74. So that's about it. I still we if we get a bounce tomorrow, again, you really want to keep an eye on this area. If it's going to continue lower, the Bears should defend the 2090, especially defend this 2098 area. So that's about all we have. I have for tonight. Again, I would just keep things very, very cautious right here. Everybody is very, very bearish on this market, and I think today may have trapped a lot of people. So I'm leaving the same the same special that we had last night. That was $74.99 for the first 30 days, and it's $149.99 per month after. But I'm also including the Markets Path free membership. Yeah, I do basically video reports like this, but more just on a technical analysis. I do morning notes, email alerts, and we have a trade room that you can go in. That's we have some really good traders. So again, the special is going to be left up for tonight. I'll be removing it tomorrow, and have a great night.